Hey everybody, this is Jim at SP500Chart.com. It is August 12th, 2013, about 4:20 in the afternoon after the close, and we're going to take a look at the S&P 500 chart, hence the name SP500Chart.com. Before we take a look at it, I need to remind you, and I'm going to see if I can do this in one breath again. Here we go. The website and the video are for educational purposes only. Nothing stated in the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. That's the easiest I've ever done that in one breath, but that's not the important thing. Let's look at the chart. And you know something? I'm going to do something a little different today. At the very end of this video, where I have my little see you later screen, the little gray thing that's got the SP500 chart information on it, I'm going to tell you something at the end of this video that's totally unrelated to stocks, but may be helpful to somebody out there just in general. So either fast forward to that now, do whatever you want to do, but there's going to be something at the very end of this video that I'm going to share with you. Well, let's take a look. Today, it sure sort of looks like we got a test very, very close to this support line right here that we're kind of considering as maybe even being a neckline if it breaks to the downside. But today, we had that weak open, and this line did not get violated on that weak open. As a matter of fact, when we were about halfway through the trading session, I noticed, shall I say, that we had a nice little lining up here of some tops on the 5-minute chart. And I was just thinking to myself, gee, look how nicely these things are lining up. I mean, it's not absolutely totally perfect, but if you look at it, I mean, it's like 1, 2, 3, 4, 5, 6, 7, almost 8, 9, and I thought to myself, if we are able to get over this top line right here, then that might be a positive sign that that the S&P is at least going to turn around and make a run for this 1700 level again. So we close the day over this line, and as always, when you break one of these resistance lines, you have to be prepared for a back test. So it would not surprise me if sometime tomorrow, if we start up, we may have to come back and back test this. That wouldn't be a surprise. But if it bounces on this line, then I think it sort of looks like this is a setup to run back up and to test that 1700 level again. And really, to be honest with you, that's about the gist of what happened today. I added this additional trend line to the chart that as best as possible lines up the last 3 lows to kind of go with these 3 highs or sets of highs, whatever you want to call it. And this is taking on something of the shape of a wedge. It's a fairly loose wedge, to be honest with you. And what I mean by that is it's not tight and compact, but I still think getting over this trend line right here looks to me to be a likely clue that the S&P now wants to reverse and at least get up and test that 1700 level again. Sadly, that would mean we're expecting a big, huge move in the S&P of nearly 2/3 of 1%. What can you say? We're just at that part in the trading and in the life of this this market to where these moves are getting tiny. So at some point, either we get a big up move or a big down move that will then re-energize the market with some, I'm going to make up a word here, call it swingability. Because right now, there's very little, to be honest with you, very little to trade on. If you're looking to either be a swing trader or a day trader, we're just not getting big moves at all. If we break this line, then we're going to probably get a decent sized move down to the 1650s. And if we break this line right here, we'll get a decent sized move up into the 1720s. But right now, we are still in between these two lines, with what appears to be a bounce on the bottom line that should set up a test on the top line. But neither one is broken yet, and to be honest with you, well, I would never not be honest with you, but I say that kind of rhetorically, just to reiterate, I got no way of knowing which way this is going to go. And I don't know that anybody does. There are certain things that say we could expect to go down, but there are also reasons that we might say no, we'll go up. And I can't really see that any one side is necessarily overweighted. I will say this, and I'm not a believer in gap filling. I don't think gaps create some kind of Bermuda Triangle of price action that sucks the market back in to fill in the whirlpool gap that was created back here in on the 11th of July. I don't believe that. However, and we've talked about this before, there is such a thing as gap support. So if we do break down through here, I would look for gap support. And that would likely be a good buying opportunity if this market breaks to the downside. But will it break to the downside with what we see today? At least for now, it looks like the S&P would rather bounce on this line and at least come up, and it appears by breaking above this little line right here, a likely rally to test this resistance again at 1700. So there's your video for August 12th, 2013. Now I'm going to share something completely unrelated, but instead of showing you the chart, I'm going to show you that gray little ending panel. And I'm not going to try to sell you anything. This is just something I want to encourage you to check out. If you're in your middle age, middle years, or even later years, or even if you're a fairly young person and you want to drop 15, 20 pounds and you're a big bread eater, I'm amazed at what a friend of mine and myself have proven for ourselves. There's a book called Wheat Belly. Wheat Belly. You need to go check this book out, because there's a lot of evidence that modern hybridized, genetically altered wheat is one of the reasons that we have so many obese people and overweight people in the United States. You know, we grow that stuff here and we export it, but there's scientific reasoning behind this. But let me just give you the anecdotal evidence. My friend, who's about 5'10", weighed about 192, was diagnosed with diabetes type 2 about 9 months ago. He read all he could when he couldn't afford his insulin and stuff, and he's a musician, so not exactly rolling in dough. But he stopped eating wheat, and since then has lost about 30 pounds and no longer is diabetic. And he was way diabetic. Now, this is not medical advice, just like my website is not stock investing advice. I stopped eating wheat about 6 weeks ago, and I was tipping the scales right about 188, 189, and I'm 6 feet tall, so that's not fat, but that's starting to get a little filling out the shirts. And since stopping wheat, and I'm eating whenever I want to, whatever I want to, I just will not eat wheat. I have lost about 8 pounds. And that's in 6 weeks. Still doing everything the same way. Just stopped eating wheat. So I throw that out to you just in case there's somebody who hears this video that says, gee, you know, I'd love to lose a few pounds. And let me tell you something about doing this. You'll find once you drop wheat from your diet, once you get used to it, you don't want to snack like you used to. And there's a scientific reason for that. So I highly encourage you, go to your library. I'm not trying to sell you a book. But go to your library, check out Wheat Belly, read it, and see if maybe that might give you some help. Hey, thanks for watching the stock part of the video, and thanks for hanging with me through this little additional thing. I just felt that this was some valuable information you might want to think about. And as always, take care. Thank you for your support.